The big tech sector continues to dominate the market as the rest of the sectors take a day to cool down. Is the market rolling over and getting ready to die, or is it just cooling down before the next leg higher? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today's going to be a special update. I'm going to talk a lot about the market structure we're currently dealing with because a lot of you are still bracing for a stock market crash, and I think you're going to be very disappointed in a few months when you don't actually get one. So first, we're just looking at a daily chart of SPY with nothing on the chart except the price action. And the first thing I want to go over is the current market structure we've had since the beginning of the year. Remember, most of this year I've been telling you this is a bullish market, and most of this year this market has continued to go higher. And there's still a lot of you that are mad at me for saying the market is bullish, but more than likely you're just losing against the market and you're getting frustrated and you're thinking it's my fault that I'm telling you the market's going higher and you continue to try to short it. So remember, there's no such thing as a manipulated market, only bad traders. And if you're trading poorly, it's because you're not listening to what the chart is telling you. Now, the first thing we need to look at is looking at this chart. Do we have higher lows and higher highs currently developing on this chart? Or are we making lower highs and lower lows? And it is very obvious looking at this chart, SPY is currently in an uptrend and currently stalling out around the previous high. So when you look at this level right around SPY 414, that is where we are currently finding resistance, but going up into that level, we were putting in higher lows, which is exactly what you see in a bull trend. Now, the next thing we need to talk about is there is going to be a lot of people that are sitting here drawing this head and shoulders on SPY, and they are currently already calling for it even though there is no confirmation. There's a name for this people, and they are called perma-bears because there is no reason to be calling this a head and shoulders pattern when it's not validated. In order for this head and shoulders pattern to be validated, we need to break down below the neckline, reject it as resistance, and then continue lower. And then and only then can we say that this is a head and shoulders pattern. If you try to jump the gun and you call this a head and shoulders pattern and you actually get some sort of teacup and handle pattern, this is actually going to blow your mind when the market starts rocketing higher and you thought you had a head and shoulders pattern. Now, just like we can't call it a head and shoulders pattern, we also can't call this a cup and handle pattern because we don't have the breakout above the neckline. So what is that telling us is that the market is 100% neutral until we break above SPY 414, or we break down out of this range and we continue to break down below this lower low and continue into a downtrend. It is only then that we can say the market is trending again, and the only trend we currently have is still the bull trend from the beginning of the year going back to the October low. That is simply market structure, and there's nothing subjective about it. It's 100% objective and there's no reason to debate it. Now, the next thing I want to do is I want to jump over to a chart of the triple Qs, and you can very clearly see the big tech sector, which makes up the majority of the triple Qs, is absolutely dominating this market. And we did get that triple bottom off of the October lows. We broke out above the neckline, which confirmed this as a double bottom, and we've been making higher lows and higher highs ever since. Again, 100% objective, there's no reason to debate it. Anybody can look at this chart and see these are higher lows and higher highs after a double triple bottom breakout. There is no reason to debate something that is objective as that, so there's absolutely no reason to have any discussions on whether or not this is a bull trend. Now, the other thing to pay attention to looking at the triple Qs is we are currently above the February 2nd high, and we are now back testing that level as support. So if we rocket off of this support and make another higher high, this is a textbook bull trend, and that should not surprise any of you. There's still so many people bracing for a crash, and when you look at the chart, we currently have a bull breakout and a retest of support, and if we bounce from here, it's going to be 100% technically sound and what you would expect to see in a bull trend. Again, if you just draw this out, this is exactly what a bull flag looks like, so why are you getting overly bearish or expecting a crash when the NASDAQ 100 triple Qs are currently bull flagging and retesting support? Again, it's 100% subjective. If you're getting bearish at support, it makes absolutely no sense. The only way you should be getting bearish is if we break the support, test it as resistance, and continue lower into a confirmed downtrend. That's 100% exactly what we're going to do if price action breaks below support and continues lower. We just need the confirmation of the price action to prove it. There's no reason trying to predict it, and there's no reason trying to guess, and there's no reason trading with an idea. Wait for price action to confirm everything. And then let's go ahead and jump over to a chart of Microsoft because they just reported earnings in what's supposed to be a recession coming with contracting earnings. And we're being told that the market's going to crash because we're heading into recession. Meanwhile, we have Microsoft over here breaking out of the August highs with a very decisive gap up and holding on to those gains all day long. Again, when we look at Microsoft, what do we see? Do we see higher lows and higher highs or lower highs and lower lows? And it's very obvious we're in a bull trend. Microsoft moves the market, and what's another stock that moves the market? Well, let's go ahead and jump over to a chart of Apple. Looking at Apple stock, which doesn't have earnings until early in May, we can see we are not yet at the August highs, but what are we currently dealing with? Higher lows and higher highs. And if you draw the neckline, we even had this inverse head and shoulders breakout, so we could be well on our way to the August highs, just like we just saw in Microsoft stock. Apple moves the market, Microsoft moves the market. Microsoft reported earnings first, did very well, and so did all the other big tech companies. So what is Apple likely going to do next? So if you are still expecting a crash in this market, all I can say to you is good luck, and you're being 100% subjective. So even if you end up being right, you got lucky. And if you're just trading based on getting lucky, you're not going to be doing this for long for anyway. So get in the habit of learning how to read charts and understanding market structure and understanding how to read price action and trends, and make sure that is the only thing you are focused on. There is so much fear and so many bearish narratives out there because fear sells, and you guys absolutely love to eat that up. If I made a video called Stock Market Crash, it would instantly get twice the amount of views because people love to digest that fear. So stay objective and follow the charts, because if you don't, you are going to regret it, and you're going to look in the rearview mirror and it's going to look very obvious that we were in a bull trend after the fact, but sitting here during the bull trend in the early stages of it, and we continue to get more and more evidence this bull trend is going to continue higher, especially now that big tech earnings are starting to break out and we're seeing these stocks break the August highs. You're going to seriously regret it if you don't do something about it. So I'm going to make this very simple for you, and I'm going to tell you exactly how you can do something about it right now, and that is simply wait until SPY 414 breaks, and then once we break above that level, you need to recognize that this bull trend is continuing, which means we're likely going to the August highs. So in this scenario, you need to take absolutely no risk on until price action breaks above SPY 414 and then starts resuming the bull trend. And that is still going to leave plenty of time for you to make a trade back to the August highs, which is likely taking us to SPY 430. This is a very simple trade plan that requires no action until we break out to the higher high. Now, if you want to take on more risk and you don't mind trying to buy lower, even though there's the chance you're wrong and you have to take a loss, then you want to manage your risk right here, right around this level at SPY 404, or even give yourself enough room to get down to about 400. Now, the problem with doing this is there's the possibility we break that support and then continue into a downtrend, and you will have to realize that loss before it gets any bigger. It is up to you how you decide to trade this, and yes, there is the scenario where you could be shorting the market and you need to cover your losses if we break out above this high at 414. So if you are currently short the market, your resistance or your risk level is right here at SPY 414, and if we start to break above that level and continue higher, you need to take that loss. The problem with doing the short trade is that while it is a valid short setup and you know exactly where to manage your risk, you are currently going against the trend. If that is what you want to do and that is how you want to trade and you want to do a counter trend trade, that's completely up to you, but it's going to be a lot more difficult if you continue to fight against the trend. I just showed you how the big tech companies are breaking out and how the triple Qs is in a bull trend, which means SPY is likely just lagging behind because of the weakness in the financial sector. So the short trade is valid, you still need to manage your risk right there, and it's going to be more difficult because you're likely going against what is a bull trend. So there is a very simple trade plan of exactly how you can trade this market, because there's still some of you out there who don't understand what it means to follow price action. There is no reason for you to be following my analysis if you don't understand how to trade with price action. So ask questions and I'll be happy to answer them, and I'll explain to you what it means to follow price action. If you're just sitting there every day wondering why the stock market went higher or lower and you have no idea how to take that into action, you need to learn how to do that, and you need to start figuring out now, because that is going to really open up your eyes to how to be a disciplined and profitable trader that knows how to manage risk. Once you realize that trading is simply risk management and putting the odds in your favor, your eyes are going to be open to exactly what trading means, and you're going to have a much better time trading in this market because you're going to understand how trading works. So if you want to come trade with other price action traders and get access to all of my intraday updates and analysis, you can do that in the Stocks Channel Trading Discord server. I also have bank trade alerts, which will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or bank trade alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.